Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 3 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Today, folks, what we're going to focus on is the gold and silver market. We got a special guest for you. It's Richard Love. Richard is the founder of Precious Metals International, a company in the Cayman Islands. Richard, welcome to TFNN.
Thank you, Tom. That's quite an intro you got there.
You like that, huh? Well, we got all the tigers and tigresses growling and prowling across the world.
Right.
You know, and folks, I met Richard only a couple months ago. Bottom line, you know, we were at a party talking about metals, and you know, Richard has been in the metals business for a long time.
Yeah, a long time.
You know, and you've seen quite a bit. I mean, in the metals business you're in, you know, we're talking physical metals, we're talking about delivery of metals, and specifically when I was talking to him, you know, and in the past, you know, you've heard Bill Murphy, we've heard Sinclair, and it's time to basically open this whole deal up once again, folks. And you know, when you take a look at MF Global, and we take a look at, you know, regulators, you know, are they doing the job? Are they not doing their job? And that's what we want to talk about. You know, let me ask you, you know, the times that, whether we have silver, whether we have gold, you know, Bill Murphy's been out there a long time doing a great job trying to educate people that, okay, listen, something's wrong here in the metals market in particular. So I guess what I'd like to do is start with the CTFC. Now, the CTFC...
You mean the CFTC?
CFTC, thank you.
Commodity Futures Trading Commission.
Okay, so tell me exactly, that's a chartered...
Well, they're empowered by Congress
to
be the regulators of the futures industry in the United States.
Right.
So they make the rules, they make the regulations, you register through them if you want to be involved in the industry.
Yes.
And then you also have to be a member of the National Futures Association.
Okay.
But in essence, the Commodity Futures Trading Commission is responsible for enforcing the rules and regulations that pertain to trading futures and options in the United States marketplaces.
And the accusation has always been that inside the future market, particularly inside the gold, and particularly inside the silver, that the short position that has been on in the silver market is way over what a normal position would be. Would that be correct?
Well, I think when you talk about the silver markets, everybody's familiar with the Hunt brothers story.
Yes.
Unless they're, you know, maybe 15 years old.
Yes.
But back then, in the late 70s, early 80s, when the Hunt brothers tried to control and grab the control of the silver markets through futures contracts, eventually the Commodity Futures Trading Commission said, whoa, wait a minute, this is concentration. We're not going to allow this, and they were forced to, in essence, unwind and or take delivery of all of the silver that they had on futures contracts.
Right.
What's been taking place over the last 2 years, I guess, 2.5 years, but predominantly since the Bear Stearns takeover by J.P. Morgan that was negotiated by the federal government.
Yes.
Is that J.P. Morgan and HSBC and a couple of other institutions have, in essence, been controlling a very heavily concentrated position on the short side in the silver markets. Concentration, according to the definitions of the Commodity Futures Trading Commission, is illegal, yet it's being allowed.
This is so cool because I didn't forget about the Hunts, but the reality is that's why they took them down, because of the concentrated position.
That's correct.
Now, that concentrated position happened to be a long position.
That's correct again.
Now, what the difference is, this is a short position, so you got to look, if we're looking as to where the money goes, well, if you have a short position that's concentrated, who is it helping?
Well, it helps the person who's shorting the market, because that type of concentration has an effect of depressing the price or restraining the price from escalating. And when you come in, such as we've seen these institutions do, and put additional pressure on the market, and we can use the August 2008 short position that they put on, which was 169 million ounces of silver at roughly an average price of, let's call it $18.50. And we look at where the silver price went by the latter part of October in 2008. It went to $8.42. Well, if I held short sell positions from 1850 and I forced the price down to $8.50, I've made $10 an ounce by then coming in and covering those short positions, or covering those positions as they're coming down, as I'm forcing the longs, the people who have gone long the price of silver,
yes,
on the futures market, and I'm forcing them to sell their contracts because they're in deep margin calls.
Right. And, you know, folks, if you take a look at this chart here, what Rich is talking about is that March of 08, you know, silver was at $21. You're looking at a continuous contract. It was at 21.18. And bottom line is that by October, it went down to $8.40. And as that was happening, the concentrated position, and was this concentrated by more than one firm, or how many firms?
In essence, two, J.P. Morgan and HSBC.
And this is public information, right?
It's public information, certainly is. And it's certainly information that's been available through the Commodity Futures Trading Commission. And
I know that, was it the Commodity Futures Trading Commission that actually had the hearings? Or was that a different part of Congress? What was going on with that?
Well, relative to hearings, the Commodity Futures Trading Commission in March 25th of 2010 held hearings to discuss and open up discussions and take testimony from the industry about putting on what are called position limits,
okay,
on both gold and silver contracts. But it was mostly concentrated on the silver contracts.
Now, what happens now? Are there limits at all? I mean, on most commodities there are limits. So are there limits, or is it you know, a situation that there are just not certain limits for certain broker-dealers?
Most clearing firms will tell you that that there are limits. The Commodity Futures Trading Commission position is that there is currently, or there are currently, no position limits on either silver or gold.
Really?
Correct.
That's amazing.
Yeah, it is.
So, you know, folks, so something that you have to understand here too, okay? I'm going to bring up silver right now as Rich and I are talking. And the screen you're looking at, just so you can understand the aspect of what we're talking about, is that one contract is 5,000 ounces.
Correct.
And but when you can basically trade, you know, right now it's worth 150 grand, but you're only putting up 24 grand.
Correct.
Now, in the context of whether we're talking about a J.P. Morgan or HSBC, do they have to put up the 24 grand, or is it even less than that?
Well, they would be classified as a hedger. These are, you're talking about spec margins.
Yes.
They'd be classified as a hedger where the margin requirements are slightly reduced.
Okay. So you can whale a huge amount of course you can. I mean, you know, I mean that is that's pretty intense. I mean, so the reality is that it doesn't take a lot of money to control this commodity in the futures market.
Not at all. When it comes to J.P. Morgan, though, they have an extra advantage. If we go back to the Bear Stearns takeover in March of 2008, part of that deal for the commodities book that they were taking over from Bear Stearns, the federal government guaranteed J.P. Morgan $29 billion, and that's taxpayer money. So
they guaranteed J.P. Morgan $29 billion. You know what I mean, as a backstop?
As a backstop, correct.
Okay. So they had, oh man, they had a lot of money to trade with then. Right?
Well,
in order to get them out of the Bear Stearns position, supposedly.
Supposedly, yes.
Right.
Yeah, without absorbing a loss.
Now, I'm going to switch gears just for a second, not on the same aspect. Has anything like this come up with the MF Global? I mean, MF Global is a huge future merchant, but were they just for public more than a prop desk?
Well, MF Global was trading their own account for sure.
Right. The bonds, the Italian bonds.
The Italian bonds,
right.
Greek bonds, etc. But the interesting thing about J.P. Morgan, I'm going to focus in on J.P. Morgan, if you don't mind.
Absolutely.
Because I have a very strong feelings that there's potentially criminal activity that's been taking place with this institution. Just last Wednesday, there was a litigation filed in federal court in New York. J.P. Morgan was named as a defendant in that litigation, And when you look at the section of the lawsuit, they're actually being accused of accepting 2 or 3 days before the bankruptcy of MF Global,
right,
$200 million as margin call money for MF Global's proprietary account. And the documents are indicating that J.P. Morgan even questioned whether, at the time, whether these were customer funds or were they corporate funds, which means basically under the rules of the Commodity Futures Trading Commission, if you were being accused of something in one of their civil litigations, they use the language that you as a principal knew or should have known.
Right.
In this particular instance, I don't think there's any question that J.P. Morgan knew they were receiving money that they had no business receiving, and they have to date refused to return those funds.
Well, and folks, what is absolutely amazing, what Richard is bringing up right here, is that if you actually look in the Wall Street Journal, on January 17th, it's pretty amazing. They have in the Journal on the 17th, this morning, that Corzine, that his actual testimony, that what's going on is that the treasurer and the person that was in charge of the finances for North America, just as you said, it had in there this morning that J.P. Morgan, after they got the $200 million,
right.
So they got the $200 million in their hand. Then they sent the document over to the treasurer in charge of the finances to sign, asking them specifically, and nothing is signed to this day. Well, till this morning.
Yeah, they refused to do it.
Right.
Yeah, they refused to sign it.
Okay, so now what that does specifically then is that this would still be under the charter of the CFTC. Would that be correct?
Well,
is that the FBI? I mean, if J.P. Morgan took customer money and knew it, who's their regulator?
Well, the actual regulator for MF Global, first tier, is the Chicago Mercantile Exchange.
Okay.
And then the Commodity Futures Trading Commission would regulate the Chicago Mercantile Exchange, as well as MF Global and J.P. Morgan.
The Merc. Okay, you just hold that thought. This is Richard Love, Tom O'Brien. You stay right there, folks. We're going to be coming right back. We're talking about the CFTC. We're going to get our heads wrapped around the Chicago Merc, J.P. Morgan, and MF Global. We're going to be right back, folks. Welcome back, folks. Thanks for being here. Richard Love, Tom O'Brien. We're talking about today, folks, we're talking about regulators. We're talking about MF Global. We're talking about J.P. Morgan Chase. We're talking about the highly concentrated position in the silver market that basically J.P. Morgan has put on. Regulatory-wise, when we look at the Chicago Merc has got so big, Richard, I thought they were a monster within themselves, but they also have a regulator. So the Chicago Merc is the regulator for MF Global. Is that correct?
Correct. First tier, yeah.
First tier. Mm-hmm. But the CFTC is the one that is in charge. It's their responsibility. That's the bottom line, to protect customer money, right?
It's their responsibility to protect the investing public. That is correct.
Right. And folks, I want to tell you something. I talked with Richard before we did this. Well, why are you here? Why, you're highly successful. The last thing, you don't have to come in here, right? Why? I want you to tell the listeners why you're so concerned about this and why you're here.
If we've all seen that movie Network.
Yes.
Where everybody starts putting their head out the window and saying, I'm mad as hell and I'm not going to take it anymore.
Yes.
There is no question in my mind that there is a complacency sitting at the Commodity Futures Trading Commission.
Okay.
They have the authority, they have the information, they have the knowledge, they have the proof, yet they do absolutely nothing. When it comes to the MF Global situation, never should have happened.
Right.
When it comes to the ongoing manipulation of the silver and gold markets, it's being perpetrated by J.P. Morgan. It's my firm belief that they're doing so with the blessing of the Commodity Futures Trading Commission.
With the blessing?
Absolutely.
That's quite an accusation. It's all right. I'm just saying that,
there are 5 commissioners at the Commodity Futures Trading Commission.
Okay.
There is only one that has been outspoken and his name is Bart Chilton.
Okay.
And I truly believe, just as he made in a statement in October of 2010, that in response to what's taking place with the silver investigation started by the Commodity Futures Trading Commission into J.P. Morgan's activities in the silver market started in 2008, and to this date there is still no response and no action. Mr. Chilton, in a response to that question, why have they not taken any action, why have there been no results published, basically made a statement that he is aware that there has been fraudulent criminal activity and that those responsible should be prosecuted. But nothing has happened. Nothing but lip service. And we're talking activity that is costing investors in the precious metals market billions of dollars since 2008. Billions, not just a couple $100 million as the money that they seem to refuse to give back to the trustees for MF Global, but billions of dollars that they've put to their profit line, to their bottom line, and at the expense of the investing public and with the guaranteed backing of the U.S. taxpayer to the tune of $29 billion. This is criminal activity. It needs to be stopped.
You know, it seems to me that when we look at the financial business in general, I mean, it's amazing. You can go back, folks, it doesn't matter whether you go back 50 years, 100 years, you know, someone can steal a pizza and go to jail, and the finance business, man, you know, you can steal $1 billion and, you know, you're going to pay a fine and that's it. What is intriguing, and not intriguing, that'd be the wrong word, you know, in an aspect like this, I guess right now we're talking about a very small space, but it's possible that where there's smoke, I mean, this can be happening to people that are sitting right out there and don't even realize that they're basically getting taken to the cleaners.
I think you're absolutely correct in that. I wouldn't disagree with that at all. And I agree with the comment you were about to make, which is where there is smoke, there is fire. And here, I don't think it's just a little fire. It's a blaze.
You know, if we stay... Let's go to the hearings. So the hearings that were in March of 2010, right?
Yeah.
Is that correct?
Correct.
Now, that was in front of Congress, right?
No, that was in the CFTC office.
The CFTC.
The CFTC hearing.
Okay, that was CFTC. Now, I remember reading that there was a guy named Andrew Maguire.
Yeah.
So tell me about Andrew Maguire.
Well, Andrew Maguire had started having email communications with a investigator from the Commodity Futures Trading Commission. His name was Elud Ramirez.
Okay.
Back in, I think it was October, November of 2009. Andrew was a trader in London.
Yes.
In the precious metals industry, and he was trying to bring to the attention of the CFTC that it was common knowledge in London that J.P. Morgan and HSBC were manipulating the silver market and were going in with concentrated shorts, with fake trades, etc.
You just hold that thought 1 second. Folks, this is Richard Love, Tom O'Brien. You stay right there. We're going to be coming back. We've shifted over to London. We're going to be talking about Andrew Maguire. We're going to be talking about trading right in the pits in London. It's a beautiful thing. You stay right there, folks. We're coming right back. Welcome back, folks. Appreciate you being out there with us, growling and prowling. Our guest today, Richard Love. Richard is the founder of Precious Metals International. What we're talking about here today, folks, so we're talking about the regulators, we're talking about J.P. Morgan, we're talking about MF Global, we're talking about, you know, how things, number one, supposed to work versus how they are working. We were just talking about Andrew Maguire, and you're telling me he's a trader in London.
Correct.
And he sent an email. Did he send an email to the CFTC?
Yeah, he started corresponding by email with an investigator from the CFTC, a gentleman by the name of Ramirez.
Okay.
It was either October or November of 2009, pointing out to the Commodity Futures Trading Commission that in London it was common knowledge that J.P. Morgan was controlling the silver market along with HSBC. And in essence, it's like getting around, you know, the bar at 5 o'clock on a Friday afternoon, and they would talk and joke about the trading and how they'd hammered the silver market, etc. And when they were planning something, they had little tips that they would send out to those people that they felt were friendly to them, and would participate, which would only snowball the downward price movement.
Right.
And he felt that this was inappropriate, illegal, etc., and was trying to alert the CFTC to that. He got nowhere with the CFTC. He actually sent emails at the early part of February predicting what they were going to do, the HSBC and JP Morgan were going to do on the 5th of February in 2010.
And 2010, okay.
In advance.
5th of February 2010, okay, cool.
And on February 5th, he had ongoing communications to Mr. Ramirez, pointing out to him each and every step that was being taken as it was being taken. The prediction turned out to be 100% accurate, and the CFTC did absolutely nothing about it other than when Mr. McGuire asked Mr. Ramirez to confirm that he had received the emails, he sent him back an email saying, "Yes, I have, thank you."
And
that was it.
Yeah, I mean, it's pretty amazing because when you actually look at this, what we're looking at now, folks, is that you're looking at a chart from 2010, and the high there on February 3rd was $16.95, and the low is $14.65. So I guess that wasn't as large a hit, but that's still $3.
It was not as large a hit, but that all took place basically within a one-day time period.
Okay.
Okay. Now, when you now bring Mr. McGuire's name into the Commodity Futures Trading Commission hearing on the 25th of March, originally he was invited to appear and give testimony. Then he was uninvited by the CFTC not to appear. He wasn't welcome at the meeting. And it was Bill Murphy who brought this to the attention of everyone attending that hearing.
I see.
Because he brought along a copy of Mr. McGuire's emails, communications with the Commodity Futures Trading Commission.
Yeah, the emails. I saw the emails, folks, and I'm sure you can see them on the internet. We'll make sure that you can see them. But they were extensive. They were extensive to the point that he was telling them what was going to happen, and then in fact it did happen.
Correct.
Yeah.
Correct.
And you know, when you look at the trading pit in London, it's probably not that big, is it?
No.
Yeah. What's important to understand, folks, in the context of trading in particular, if you've never been to the Chicago Merc, everything's electronic now. But if you were there years ago, those pits, except for the S&P pit, really, had 50, 60 guys in them. I mean, that's a good sized pit, right? I mean, so you don't need a huge amount of people to basically bring something down if, in fact, you have money behind it, because there has to be the bread behind it.
Well, there has to be that, but there also has to be, a plan of attack, if you will. And the way that they go about these plans of attack is, as a large market maker, JP Morgan will show a fake trade to test the market.
Okay.
They'll pull their bids, meaning that they're indicating to the market they're not buying. That puts a scare in the market.
And that's a big, the flash crash.
Yeah.
Everyone pulled their bids, right.
Exactly right.
Right.
And it's been ongoing. I mean, there's several instances on, that if you look at the historic charts of silver since 2008, we had the one right after Bear Stearns. We had the August right through till October of 2008. The biggest one, which stands out, I mean, it's as plain as the nose on anybody's face, is the May 1st one of 2011.
May 1st, 2011. Well, let's go look at it. Let's see what we got here. So May 1st, 2011, 0411 05. Let's see, 30 11. Oh, baby. Okay, so I see. This is when it went from $49 down to $33.
Well, actually, when the Asian markets opened at 6 o'clock on Sunday night.
Okay.
We had closed on the previous Friday just over $49.
Okay.
Just a hair over $49 on the spot market. By the time we hit 6:30 on Sunday evening, between 6 o'clock and 6:30, they had run the price down to $42.
There it is, 42. You're looking at $42.19, right? Yeah.
In the thinnest traded market that trades, period, anywhere in the world. That is the worst time to place liquidation activity, is in that particular marketplace, and specifically when it's just opened. because there are no buyers that are active at that time.
Now, I believe what you're saying is that if, in fact, you owned silver, why the heck would you sell it in the worst market you can get because you know you're going to get bad prices, right?
Well, if I owned silver, I wouldn't do that.
That's my point. So what he's saying specifically, folks, is that, okay, so watch, is that let's picture that you owned all the silver. You have the silver. Would you go out on the finished market and say, I got to sell it right now, instead of waiting? Well, they only wait 8 hours for the U.S. to open, right? Correct. Or 9 hours or whatever that is.
Correct.
You know what I love? What I love, and you know this, folks, what I actually love, when you played hockey. I played defense when I was hockey, and I played a middle linebacker. And what I've always found is that you can find out more about the opposite than, and that's a perfect case.
Right.
The common sense would be, okay, hold it. Why are you selling now? And in that case, there was that J.P. Morgan too.
Well,
HSBC, or does no one know who it was?
I sent email communications to Mr. Chilton at the CFTC asking him to please investigate this. And the response that I got back relative to this is that it was flash traders from Europe.
Okay.
It was unknown rogue traders from Europe, etc., and that they had no ability to track who it was. My response back to him was, that's not possible. All you have to do is follow the money.
Right.
Because when you follow the money, you're going to find out who's behind the trade.
Well, it's amazing. It's amazing that, and folks, it's amazing bureaucrats in general when they can give you an answer like that, because we know for a fact that between terrorism, between the mob, between drug dealing, between anything, they can follow the money in 2 seconds, man.
Oh, yeah.
They brought down, who's the guy in Panama? He's still away from how many years ago, right? Yeah, so that... Noriega, thank you. So, okay, so right now, inside the business, the CFTC, are they basically at the point that they're saying they're still investigating this?
That's all they're saying.
That's all they're saying.
Correct.
Okay. Now, with MF Global on the cooker right now, it seems that the Merck, number one, didn't do their job, and now the CFTC also probably didn't do their job. Because it seems to me that something can't go bankrupt overnight. I mean, it would have been 3 or 4 days. Bad trades, we know bad trades, you can get bad trade. But the reality is that, well, I'm asking you, do you think either one of them knew that the money was already, well, that they should have been out of business? Because if you have not enough money, don't you supposed to inform your regulator that you got to stop doing business immediately?
You have to put through as a futures commission merchant, which is the status that MF Global had.
Future commissions merchant, yeah. Okay.
You have to do regular net capital reporting requirements.
Okay.
On a weekly basis.
On a weekly basis.
Weekly basis.
Okay.
And they indicate what kind of capital you have in relation to the amount of customer capital that you're holding.
Right.
And there's a certain percentage that you have to have above and beyond that. The second that they would have gotten even close, the CFTC should have been all over them.
I got it. Okay.
Now, the regulator for them, the first-tier regulator, is the Chicago Mercantile Exchange.
Right.
So, the CFTC will blame the Chicago Mercantile Exchange. Chicago Mercantile Exchange is going to blame the CFTC, or they're going to blame the faulty reports from MF Global.
Right.
It's a passing of the buck. But the bottom line is, the way that the industry works, the Chicago Mercantile Exchange is really responsible to all the investors for the funds because they're the regulatory body overseeing MF Global.
Well, I think it's shocking for the folks that had future accounts there that, number one, that someone else could use their money. I mean, I've been in this business a long time, and I've told the listener before, that absolutely blew my mind. Because I don't think you can do that in the equity business, right? I mean, maybe you can. Maybe I don't know that either. But that was shocking to know that supposedly they could use their money, and I actually still don't get how they can use their money and it's supposed to be segregated.
No, they're technically not allowed to use a customer's money for anything other than securing that money for the customer and they are allowed to secure it, for example, in T-bills, in treasuries, etc.
I get it.
And keep the interest that is earned on those bills.
Thank you. Thank you.
And
that's an overnight deal.
Yeah, it's an overnight, or well, basically that's the way it works in the FCM business. You do these overnight, but the FCM is in no way allowed to take 1 penny from a customer's account and use it to pay an electric bill, or to pay a margin call in their own corporately owned proprietary trading account. They're
so
not
basically,
allowed to touch
this is a robbery.
It's theft.
Right.
It's out and out theft.
And why do you think it's taken so long? I mean, we got hundreds of thousands of people that are out there. They're waiting for their money, and in this case, you hear people say, "Well, it's a couple $100 million, it's no big deal." But there's people out here that are broke. That I mean, if you had your account there, I don't care whether it's 5,000 or 5 million. The bottom line is that you don't have any bread right now.
Well, in this country, in the United States, and I hope all the attorneys will forgive me for using this, but we have a lot of ambulance-chasing attorneys that specialize in this particular area.
Yes.
And without any cost, I would highly recommend anybody that had an account with MF Global, that had cash in it, and they haven't got their cash back, is to get an attorney to go after the trustee, who can play more pressure on J.P. Morgan, who has, we know, $200 million, because that's already been admitted.
Right.
But they're refusing to return it. To go after the Chicago Mercantile Exchange, who is first-tier responsibility for the customer funds that were at MF Global.
And yeah, this is amazing.
Oh, it's a terrible, disgusting mess, and it goes right to the core of the integrity of commodities investing in this country.
Yes.
I think that's an even much bigger picture in terms of jeopardizing the exchanges here in the United States.
Well, and I guess jeopardizing, a lot of the farmers. We get farmers that call in, and the bottom line is that there's a true hedging mechanism for farmers out there.
That's right.
In order to get paid. And we're not talking, folks. I'm not talking about these big corporate farms. I mean, I know we get the calls in. You're talking about family farms that have been in 3 or 4 generations. Do you know what I mean? And not a lot of bushels. I had a guy call the other day, had 20,000 bushels of corn, but that's a lot. I mean, that's a lot for them.
That's right.
And if you can't trust the futures and you can't trust the regulators, where are we going to go?
That's the big problem, isn't it?
Yeah. And that's why you're here, isn't it?
That's why I'm here.
And that's what makes America, doesn't it?
Well, thank God we have freedom of speech here. At least we're supposed to have. And we're allowed to speak our opinions. But, again, I'll go back to where there's smoke, there's fire. And it's all the same crooks and villains that are all involved in this whole thing, all the way down the line. And now, it has to go to here. It has to go to the Commodity Futures Trading Commission.
Okay, we went through the downdraft of 2008, and if we know anything, banks privatized the winners and socialized the losses. It's supposedly the biggest capitalists in the world, but they're the biggest socialists in the world because they got away with it, right? But they couldn't get away with it without the Fed behind the move, our own government behind the move. So when we look at something like this, when you look at the CFTC, when you look at J.P. Morgan, when you look at the silver market, when you look at MF Global, when you look at Corzine, do you think that, number one, that the Fed knows what's going on, the Treasury Department knows what's going on?
I think relative to the gold and silver manipulation that's been taking place, absolutely. Absolutely.
And when we talk about I guess in the Fed's case, and in the government's case, you stay right there, folks. Richard and I are going to be coming right back. We're going to be talking about, number one, what we've been talking about, what's going on in the metals market. And what we're going to find out now is that what you folks can do in order to make sure that, basically people are held accountable. That's what we're talking about here. Richard Love, Tom O'Brien. We'll come right back, folks. Welcome back, folks. Thanks for being here. Richard Love, Tom O'Brien. So when we look about the silver market in particular, the Federal Reserve, you think that they're complacent in it?
Yes, absolutely.
And I guess why would they be complacent in it? What is good for them in that?
Well, suppressing the price of gold, suppressing the price of silver against the devaluing U.S. dollar. And
yes.
We all know that fiat currencies are devaluing.
Sure.
All over the world.
Dramatically, right.
Is a very good thing because it helps prop up the dollar. And the United States government, specifically the Fed and the Treasury, do not want to see a weak dollar. So they've been active for quite some time in suppressing the price of gold. Since the takeover of Bear Stearns, I don't think there's any question, having put up a $29 billion guarantee relative to Bear Stearns' commodities account for J.P. Morgan, is that it's given J.P. Morgan a carte blanche to do whatever they want in the gold and silver markets that keeps the prices down in an environment across the entire world where these prices should be substantially higher.
When we, for all the folks that are listening out there, what could you suggest to them to change the way either regulators are looking at things or to basically get not necessarily a clean slate, but to get answers? I guess we need answers, right?
We definitely need answers, and the first party we need the answers from is from the Commodity Futures Trading Commission. We can be writing to the commissioners and their emails are on the CFTC site.
Yes.
We can be writing to Chairman Gensler and the other commissioners that are there, demanding answers. Why have you not done anything about this? Why have you not completed your investigation into the silver manipulation charges against J.P. Morgan that the general public levied in 2008, to September of 2008? Why have you not met the obligation that you have, a legal obligation to Congress, to the populace of the United States, to have established position limits on these products as of January last year, January 2011.
So in the new Frank Dodd bill, they were supposed to establish them, right?
As of January 2011, correct.
And, well, it's January 17, 2012.
That's right. They're a year behind, and they've just come up with one excuse after the other. And it's time that we started demanding that they do their job, period, and put a stop to this ongoing manipulation that's being perpetrated by J.P. Morgan.
I guess when you hear the bureaucracy in motion, there's such a thing as a slow bureaucracy, but this is basically, if we look at Madoff, if you look at investor protection, it's almost that we don't have any investor protection.
Certainly in this regard, yeah, I would agree. It's
amazing.
Not doing their job, period.
Well, listen, Richard, we really appreciate you, all the great information you've given us. We look forward to having you back. I'm going to actually, I know you'll help me. We'll get hold of Bart Chilton, and we'll get hold of a couple of these other guys and see if we can get them on and see if we can get some answers.
I'd like to get Andrew Maguire here. That would be good.
I'd love to get Andrew Maguire here. When you bring up Andrew Maguire, he kind of like disappeared off the face of the earth about 2 weeks after those hearings, right? Well, he supposedly got, I guess he did got a hit and run in a car, right?
He and his wife were the victim of a hit and run just a couple of days after the March 25th hearing.
This is like the CIA deal.
Yeah.
Except, folks, it's real. I guess the sad. You know what the sad part about all this is? The sad part is investors trust regulators, and the bottom line is that we can prove in the MF Global case that, well, they shouldn't have trusted anyone. This case here is going to, get developed, has been getting developed, and we really appreciate you coming out here. And sticking their neck out.
Well, listen, I think Mr. Chilton knows a heck of a lot more than what he's letting on.
Well,
I think he's the guy we need to put on the hot seat.
Well, that's what we'll do. This is Richard Love, Tom O'Brien. Thanks for being here, folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Look forward to speaking to you tomorrow night. Wow! Go get them, folks.